The good old broad statement. We all do it, myself included. But when it comes in the world of free education, it can get very, very tricky, and I'm going to explain exactly how. Just the tip of the iceberg. That's what I want you to kind of keep at the forefront of your mind as I go through this, because that's essentially what's going on, at least from my perspective. Because again, like I was saying at the intro, I also make these broad statements and these kind of sound bites, if you will, that sound great, and they are true. But just because they sound great and are indeed true doesn't really tell you anything. It tells you a broad concept, hence the word, just the broad statements. But when you really break it down, it goes to show why you got to take things further when you're trying to learn how to trade. Why you got to dig deeper, and why these, tip of the iceberg type things, these surface deep concepts sound great from a marketing perspective. Again, I'm guilty as charged. But I'm telling you right now, a lot of the broad statements are intentional to just give you those overarching themes. And then, yeah, like I said, I'm going to admit, hopefully have you say, well, yeah, that sounds good and that is true, but I want to know more. So when Clay, will you teach me more? And then, yeah, invest in one of my training programs. I have no shame in saying that. That is, the motive. But this is just a warning. So even if you never decide to invest in one of my courses, that's totally fine. But I want you to be just well aware of this. And again, broad statements, and this is one of the ones I like to use the most because it's very important. It's very applicable to trading, whether it's stocks, bonds, options, commodities, Forex, futures, anything. Cut the losers fast. And maybe you're thinking, well, yeah, that's a good point. That sounds good. And this is very true. You do want to cut losers fast. But let's actually kind of break things down. Let's look at the word losers. So, wait a second. Okay, cut the losers fast. Well, what actually is a loser? What do I mean by that? Well, let me ask something. If you buy, and then all of a sudden after you buy, it goes red, does that mean it's a loser? Does that mean you need to cut it? In other words, sell it? I don't know, maybe, maybe not. When? Again, kind of going back up to that. That's the worst looking question mark I've ever seen. But if it's red, like I said, is it a loser? How fast is fast? Yeah, the whole saying, cut the losers fast, is a great saying. But you need to be able to actually define what a loser is. And I'll answer that for you. No, in many situations, just because you enter into a trade and it goes red, it's showing you losing money, doesn't mean that it's a losing trade. Therefore, you shouldn't just sell it just because something goes red. Now, the whole when part, yes, at some point in time, it does become an official loser where, yeah, you need to cut it fast and just move on to the next trade. But when that is, well, that's where you go into, the surface deep. I mean, like I said, there's two layers. There's the surface deep layer, which is that, blue line, and then you start to dig deeper and you get into, the good stuff right here. And that's where you want to be. Surface deep is great for sound bites. It's great for, just broad concepts. But to narrow down those concepts, you need to be able to dig deeper. And this is what I mean by digging deeper. What is a loser? When does it actually become a loser? And then, that also, just like I said, unfolds into just, well, how quickly should you deal with it? And this is just one statement out there. There's many statements that, are broad, that are true, and that certainly do pertain to, trading. But there's a lot more to it, and that's where a lot of people I see, no, Clay, I don't need to invest in your programs. I understand you got to cut the losers fast, and you got to do this, and the other thing. And then sometimes I'll press people like, yeah, you're right, you got to cut the losers fast. How do you know when it's a loser? And some people say, well, when it's 5% against me, it's a loser. Really? And I'm not going to get into why that is just totally just stupid. It's it's stupid. Just because if you're saying, well, a loser is if it goes X amount of percent against me, that's just not how it works. There is more to trading than that. Now, don't get me wrong. I'm glad that people are focused on losers. I'm glad that people are focused on managing risk and analyzing risk and all that sort of stuff, which is what we should be doing. But there is a lot more to it than just, well, if it moves 10 cents against me, it's a loser and I need to get out. There's more to it than that, and I'll just leave it at that. So be careful, be aware of these broad statements, and just because Yeah, I understand now that I got to cut the losers fast. Well, really analyze the situation. Be like, well, how do I define some of those words within the broad statement? And if you can define them in a very logical way, then fine. But I think if you're being honest with yourself, especially if you're new, say, oh yeah, I guess that broad statement, it means something to me in the big overarching sense, but not kind of with the nitty gritty details. And the nitty gritty details are what are going to propel you onto, long-term consistent success as a trader. So like I said, I don't know, maybe in the comment section, give me some other broad statements out there that maybe you've seen. But cut the losers fast, favorite of mine. But yeah, there's just a whole lot more to it. It's just the tip of the iceberg. You got to dig further. You got to figure out more of just what is going into a statement such as that.